You were listening to chartingwealth.com for Wednesday, the 6th of July, 2016. Let's jump right into things. IYY is where we always start. That is the iShares Dow Jones U.S. Total Market Index Fund. For the day, it was down 0.85%. Now, we draw different kinds of candlesticks on our charts. We use Hinken Ashi, which means average pace. Got a great training at the chartingwealth.com website. I really encourage you to watch. You can also get it on our YouTube channel. What do we have here for the day? We have a 2-day candle. The first half of it was drawn over the course of Tuesday, the first day the market opened, Tuesday the 5th of July, after the Independence Day weekend. We have a red open box candle with a bit of a wick on top. That is reflecting, again, the Hinken Ashi candlestick continuing to move up. And again, we draw these candlesticks different to show average pace. Has to do with a different way that the opening, the closing, the high and the low are determined, and it helps us see a pace differently than you might otherwise see it just looking at a standard candlestick. What do we have going on? Well, the total market was down 0.85% for the day. Derivative oscillator lost, however, some of its downward momentum, and we see that the MACD and the signal line are almost running parallel to each other, but they are closer. They are getting actually closer than they were on the last 2-day candle. Now, the 5th is just the first day. The 6th of July will wrap up the 2-day candle, but right now, we have a red open box candle. It means indecision with Hinken Ashi candlesticks. You see much more indecision in spinning tops, but again, this is a red open box candle. Strong down moves are shown by big, long red candles with down wicks. Strong up movement is shown by green open box candles with wicks on top and no down wick. So we have indecision. We do have a down day. Now, if we look and see what is showing up on the 4-hour chart, we can see where the market topped off on the 4-hour chart after passing through the 2-day trend line, actually moved and closed down below it. As far as the Hinken Ashi candlestick goes, the day was basically two solid red down candles. Not big down candles, but they had wicks on the bottom of them, no upward movement on the Hinken Ashi candlesticks. The MACD and the signal line are moving a little closer together, but they're still moving up. Derivative oscillator still in the positive, but losing energy. So we don't have a crossover or anything like that. We have things pulling back from the prior up movement. Do we have any confirmed up movements or down movements on our chart? Well, remember, the short chart is not what we make the call by. We're still in a confirmed down move. Still in a confirmed down move. We're waiting for the pullback to end on the 4-hour chart to find a jumping in point. Now, those of you who really love our Hinken Ashi candlesticks, you may have jumped in the morning, well, probably in the afternoon after that morning candle formed, because that does show that the upward pressure is off, particularly the way that the day ended. But again, coming after a holiday weekend, we don't have any crossover yet, no confirmed crossover going down. So some danger there. But again, we're practicing with virtual money. Give it a shot. Practice, develop your own way of trading. Listen to what we do. Use our charts, but don't be afraid to make your own modifications, your own tests, do your own trend lines, figure things out. If you can find a better mousetrap, by all means, build your own. This is what this is all about. Experimentation, learning how to read these charts, getting comfortable with entering in and out of trades. That's so important for you to get that experience and do it virtually. Remember, we are not a stock calling service. We are an education firm. Now we're going to go back to from our 4-hour to our 2-hour chart. We're going to go next to the S&P 500 as represented by SPY. What does it look like? Very similar to IYY, a red open box candle with a bit of a wick on top. Derivative oscillators losing some of its downward momentum, and the MACD and signal line are getting closer together, possibly crossing over going up. We will just have to wait and see However, the market was down 0.72% on the S&P 500. What do we see? As far as our candlesticks go, we see it's turned from green at the end of the day on Friday to 2 down red candles with lower wicks. So pay attention to that. As far as where things are with our 2-day trend line, of course, that was breached at the end of the day as far as our 2-day chart goes. Now let's go over and check out what's going on with the Qs. The Qs actually had an up candle drawn, a green up candle for the first of the week. This is the first day of the 2-day candle. Derivative oscillators losing energy. MACD appears to be moving closer together, but not crossed yet. Crossed above the 2-day down trend line. We have the second green candle on the Qs. Again, the market was technically down 0.61%, but our average pace candlestick is showing us something you're not seeing with the price movement. Now, if we go and take a look at what happened intraday, let's see what's going on there. We saw down movement on the chart for the morning and for the afternoon. So we've got down movement on both of those days. So we will continue to watch exactly what's going on those charts. That downward movement is actually hardly below the up movement from the end of the afternoon on Friday. So again, we will continue to watch this movement, see what's going on. Those of you who really like your Hinkin-Ashi candlesticks, you do have a pullback there on the short chart. Might give you the ability to jump into a down trade. Remember, let's go back. We are still in a confirmed down move, although it is not a strong down move, but the MACD still in a down move. Some risk there. We don't have good, strong, we've got 2 up candles. So again, you're taking a lot more risk on this chart, that is the Qs, than you are in the S&P 500 with that red open box candle. Now, lastly, we're going to go and take a look at gold. As the other markets, the indexes were down. Gold, of course, as one would expect, is up inversely, up 0.83%. We have been up on gold since it crossed over going up on the 13th of June. We had 2 2-day candles of strong down movement on the 21st and the 23rd, that 4-day period, then started shooting up again. And we can redraw our trend line, and we continue to have up movement. Market closed above, and a strong up candle has been drawn for the first day of this new 2-day candle on the 5th of July. Let's take a look at what's going on the 4-hour chart. And again, we had those pullbacks, and you can see your Hinkin-Ashi pullbacks. We saw those. If you jumped in any of those, you have been rewarded well with the continuation of the up movement, either getting in on the green candle on the 29th in the morning or the green candle on the 30th in the afternoon. The market continued to soar upward in gold after that. Well, that is where we are right now as we get to the end of the day on Tuesday. This is a short 4-day week because of the Independence Day holiday on Monday. As we go into the markets on Wednesday the 6th, we love to hear from you. Please follow us Facebook, Twitter, Instagram, YouTube. You have questions, problems, concerns, go to our website, chartingwealth.com. Let us hear from you. Sign up for our daily newsletter that includes this podcast. You get it in video format. And we just appreciate you. If you care about what we do and appreciate what we do for you, do go to iTunes, give us a 5-star rating, subscribe to the podcast, say something nice about us. We have both a video cast of the weekly review and forecast, and we have our daily audio that also includes an audio of the weekly. In addition to that, go to YouTube and subscribe to our channel. We're getting closer and closer every day to 1,000 subscribers. We have many thousands listen every week. But hardcore subscribers, once we get to 1,000 subscribers, we'll be able to offer you proprietary broadcasts, and we can't wait to do that. but we got to have your help to get there. Subscribe to the channel at YouTube and again at iTunes and give us a 5-star rating. It helps us with the metrics. Thank you so much. God bless. Let us hear from you. Wish you the best in learning how to read these charts. They are the roadmap to riches, whether the market's going up or down. And we do have a great new teaching online. Please go to the website, listen to it. It's called Inverse ETFs, How to Make Money When Markets Crash. You want to listen to this one and study it. Thanks so much. God bless again.